the country's oldest stock exchange, but that doesn't mean it is not moving with the times. Bombay Stock Exchange has gone ahead and launched a slew of new products as it looks to garner more volumes on its platform. Not just that, but a lot of other initiatives to talk about. Joining me in the studio is Ashishkumar Chauhan, the MD and CEO of Bombay Stock Exchange. Ashish, so good having you. Thanks so much for taking the time out and being with us. Actually, just before we get to the business questions, Ashish, a couple of news bits that I wanted to get out of the way, not just from a BSE stock perspective, but from the climate perspective. I believe you and National Stock Exchange are said to have written to the market regulator seeking to bridge the variance in stock prices for the companies which are under the IBC process. Can you talk about it?
See, basically, what happens is when a price discovery for the first time happens on two different exchanges, there is a possibility that the price discovered on both exchanges could be at variance with each other. And that used to happen in even IPOs, that on the first day, a price could be totally different, and then the price band on that basis is actually defined so that one exchange may continue to have different prices for pretty long time to come. And we resolve that by sort of proposing a framework to the regulator in IPOs. And similar framework has been proposed to the regulator for the newer IBC companies, which are basically, in a sense, you are discovering their prices after a long time, after the resolution and so on and so forth. And that's where basically few companies, we have seen that happening in both the exchanges. And it's our duty to ensure that both the exchanges' prices are in sync with each other.
Okay, interesting. The other bit, and which I personally didn't think will have too much of an issue, we spoke to prominent traders, etc. They also believe there will not be an issue. But this CBDT on the derivative settlement attracting STT, and right now only with a limited set of stocks, eventually maybe the larger names as well. Market has usually found a way to deal with measures that could be seen as impacting volumes, but not impacting volumes eventually, because trade is out there all the time. You reckon that would be the case this time around as well?
Yeah, in a sense, see, we need to go to the right frameworks. And currently, if you see, the Indian markets are among the most speculative, rather the most speculative markets in the world, with almost 30 times derivatives vis-a-vis one-time equity, even larger than Korea. And that tells you that something needs to be done, and that's where I think the delivery-based derivatives and also many other slew of sort of new norms to ensure that people who do not have the skills, do not have the wherewithal, don't get involved. That doesn't mean the volumes go down or something, but basically the current issue of the delivery-based derivatives and how to apply the STT. I think yesterday there has been a resolution to that with CBDT also being called in by the High Court, and I think it has been pretty much well resolved, so I don't see too much of any issue. And eventually all over the world, the percentage of delivery in derivatives is pretty low even otherwise, so the total impact on the STT outgo may not be that high, but there has been a clarity now, which is also in a sense through the High Court, and that is a welcome move.
Okay, how's business looking like, Ashish? I mean, I saw. I mean, if I saw how you ended the year with a 28% growth on a like-to-like basis alone, you can, by the way, remove it if you don't like it. But the 28% YOY growth is pretty comfortable for most people. How have you read into the last 2 years and not necessarily just the last 12 months or 18 months since you've been listed? And what's the trajectory looking like for the next couple of years?
See, our primary focus remains to be regulations and compliance. We are a compliance organization, right? That comes first. And if we can continue to do compliance, maintain people's trust, also regulators trust, the society's trust, then the profit will be a byproduct. That is how we see it. At the same time, we have seen that over 25 years, the volume of markets has gone up 10,000 times. Will it mean that next 25 years it will go up 10,000 times more? Probably we have run out in terms of the steam, in terms of volume growth. It may still go up a little, but it won't be like explosive growth that happened, because there were several reasons of why this happened. One is the automation part of it, standardization part of it, then derivatives, so leverage came in, additional products came in, currencies, interest rates and commodities and all, and then software-based trading, algorithm, then co-location. Each of them gave it like a 10x jump, and now you have 10,000x kind of numbers, not 10,000%, but 10,000 times, right? And we see that next 25 years may not be about trading volumes, because trading volumes are being generated, but they are not getting any profits, neither for the investors nor for the brokers, and it's creating tremendous risk on the system also. And that's where also commoditization is ensuring that the brokerages are going down and so on and so forth, and that is basically ensuring fewer brokers will remain in the long run. So we have actually gone into a different framework, saying we will convert ourselves into a more of a distribution and e-commerce framework. So we started with IPO distribution. We are very, very large compared to any other exchange in India in IPOs. We are also very, very large in bond distribution, like 3:1 type of numbers. Corporate bond distribution, we do like 3 lakh crore a year, which is larger than the entire banking system's net credit into the corporate sector over the last 2 years. Similarly, offer to buy, offer to sell, we are like 90%, 95% of the market. And these are the new markets which are not very exciting. They don't move much, so you don't talk about it. True. Brokers don't talk about it, but those are younger markets becoming very large. The last market, or the second last market we started was SME, which again has become a distribution market. It's also creating wealth for India, is a separate point. But on top of that, now the mutual fund distribution, which nobody actually cared two hoots about, is now becoming the largest for BSE. Today, we might close this month by having 3 million transactions. We have become the largest distribution framework of mutual funds in India now. Over a period, this automation is getting so many direct IFAs on BSE. Yesterday, we completed 14,000 IFAs directly on BSE. But if you take indirect, that is through our members, it could be 2 lakh people who are just distributing mutual funds on BSE platform. We are now also going with the insurance distribution. We have applied to IRDA for a JV on distribution with EBIX of US. And so we are trying to go towards becoming basically financial distribution I was about to ask you that are you setting into place different blocks and different revenue streams which could do well for the consolidated business over the course of the next decade, so to say? Absolutely. So we have started so many new revenue streams, and they are not exciting. Nobody knows about them. No analyst will talk about them because they are used to talking only the broad revenue streams they have seen over the last 20 years. True. But the next 20 years is going to be fundamentally different in our business. And that's where we are focusing on. In the older businesses, even currency, we have become undisputed leader now. In interest rates, we are pretty much there. And so even older businesses, we are gaining huge grounds. But there, you may get a lot of volumes. But because the fight is so tough, both sides lose revenues. Or we may get little revenues, although a lot of market share. But it's not getting you that kind of returns which you would want. Whereas in mutual funds, we are getting phenomenal returns. And we are growing 100, 200% year on year for the last several years. And that's where I see the future of exchanges, is future of distribution, especially for a developing country like India. Is that how it's evolved in some of the other global peers as well, Ashish? No, we are basically pioneers in some of this to convert ourselves into distribution powerhouse. And the world, when India became automated in 90s, the world was not automated, right? We were pioneers. Now we are taking the entire financial industry into a different direction, and we are becoming pioneers again. And thought leadership is where you need to basically move towards. And that's where what we call in blue ocean markets, the returns are actually very, very large for very little investments. And that's where we are actually seeing it as we go. So I don't want to make people very excited, but the fact is we are scoring very, very well in all this stuff. Of course, the GIFT City exchange itself is doing $900 million to $1 billion business every day. It's just the beginning. It's larger now than other older international exchanges, which are international financial service center exchanges like DGCX and all. It's now larger. And even Indian television is not even recognizing that, because somehow we want to wish it away. But it's there to stay. And it is actually giving India a leg in to the international market.
Interesting. I promise you I won't make this interview about news, and I therefore will not try and eke out a couple of news bits that are floating around. But my one last question would be, should we, as somebody who speaks about markets, etc., be prepared to talk about markets for longer than what we've been used to? Until now, it's been till 3:30 p.m. or 4 p.m. Do you believe come October, we need to talk about it for longer hours?
Why not? I mean, all of us have to work hard. India has to develop further.
So it's on the anvil?
No, we have applied for that. SEBI has basically announced that from October 1, it will be till 11:55 for the derivatives, in equities too, in addition to commodities. So we applied for launching of commodities, and we have applied for the longer markets for the stock and stock futures and options and index futures and options. And hopefully, as and when the approvals come, we will be able to trade
any timelines?
Long hours. October 1.
No, but do you think the approvals will come by then?
Why not? I mean, of course, we are used to running even longer hours as an exchange in Gandhinagar GIFT City. We run 22 hours a day, right? So we are used to doing all this, and I'm sure slowly all of us will adjust, like the way we adjusted to longer trading hours in 1994-95 when automation happened, and so on and so forth.